I saw a lot of people fall through the cracks where I would show them a house, they would fall in love, and somewhere between that point and getting to the finish line, things weren't happening. And that means that, somewhere in the mortgage side of things, it wasn't working out. And a lot of people were just distraught. And I said, well, maybe if I switch over to that side of things, I can really make sure that no one falls through the cracks, and I'm able to really be hands-on and help them make sure they close.
Hello, I'm Tijuana Evans. I'm a wife, a mother, a Christian, a boss, an entrepreneur. As you see, I wear many, many hats. I'm a successful and blessed woman. Hello, and welcome to Let's Talk with Tijuana, episode 5. Today, we have a pleasant surprise. We have Paul Grady, who has come by to share some mortgage information with us. So we're ever so thankful to hear what Paul has to share with us.
Awesome. Yeah, it's a true pleasure to be here. Just really excited about all that we're going to do together in the future.
Yes, absolutely. So Paul, tell us a little bit about yourself.
All right. So, currently work for Mid-America Mortgage. Have about 5 years of mortgage experience. I really enjoy being able to help people.
Great. And so Paul and myself, we've actually been, we've known each other for a very long time. Paul actually was an on-site agent for Eastwood Home Builders. That's when I first met you.
Yeah.
And then he transitioned into the mortgage industry.
Yeah.
So which company are you with?
Mid-America.
That's right.
Mid-America Mortgage. We are based in Texas, but we do have a Charlotte location that I work out of. So really cool stuff.
All right. And why did you make the transition between being an on-site agent for Eastwood Homes and then going into mortgages?
I mean, to be honest, I enjoyed both. They're both career paths where I get an opportunity to help people fulfill their dreams.
Okay.
But I felt I was more effective in the mortgage side of it because, as I saw a lot of people fall through the cracks where I would show them a house, they would fall in love, and somewhere between that point and getting to the finish line, things weren't happening. And that means that, somewhere in the mortgage side of things, it wasn't working out. And a lot of people were just distraught. And I said, well, maybe if I switch over to that side of things, I can really make sure that no one falls through the cracks, and I'm able to really be hands-on and help them make sure they close.
Great. We definitely need really good mortgage brokers who have the client's best interest.
Yeah.
So tell us a little bit about what you can offer.
So what's really great about Mid-America, me specifically, is, I don't work traditional hours. Usually you're gonna have most companies, they're only gonna work, Monday through Friday, 9 to 5. In the real world, however, most people are looking at homes either after work hours or on the weekend.
Right.
So if you have questions or you have concerns that need to be addressed, normally you're gonna have to wait until Monday. Whereas, I answer my phone all through the weekend, night hours, because I do understand that, a question that goes unanswered, really is it's a big problem for people that are concerned about whether this is the right time, whether I'm in over my head. So I want to make sure that I'm there, kind of like, an on-call doctor. I'm available when you have those questions, so that you know that you're making the right decision, and I'm here to help.
Great. So there are 3 types of mortgages, right? You have the FHA, you have conventional, and then you have VA.
We actually also have USDA as well.
Okay.
So we actually have the 4 types. So conventional is more so for those that have better credit, usually a little bit more money down. Then you have FHA loans. Those are actually backed by the Federal Housing Authority. These are actually more geared towards people with less money down as well as a lower credit score. So if, let's just say you have a 580 credit score, which most other lenders that don't offer FHA won't touch, and you have 3.5% down, we can get you approved. Or
So hold on, you're saying so with a 580 score,
yes,
3.5% down,
yeah,
you can get someone approved.
absolutely.
Okay, perfect.
But even better than that, some people have the money, but they don't have the score.
Okay.
So if you have 10 to 20% down, we can actually go as low as a 500 with the FHA program and get you approved.
Wow, that's
really,
great.
really, really amazing. It does follow the FHA guidelines, so sometimes a little more stringent, but nothing that can't be taken care of. Really, really cool stuff.
Okay, and so now the VA and the USDA.
Correct.
loans.
So VA is geared towards select members of the military community and their families. What's really great is you do not have to have a down payment. So literally you can get 100% financing. And USDA is also amazing for people that live in select rural areas. It's another great program where you can get up to 100% financing as well. And just really, really great terms. So for a lot of people who thought they'd never be able to get a house, we've got unique programs that can help you.
Yes.
Yeah.
So talking about 100%, 100% programs. Some people just don't really understand what that means. So can we kind of talk about what that means as relates to a down payment versus, not having a down
Okay.
payment?
So when we say 100% financing, depending on the program, some programs mean there's no down payment, but you would still have to cover your closing costs. And closing costs, they range from the lender fees, escrow fees, and then your closing fees. But then they have other programs where 100% dependent, like say a VA loan. When they say 100%, they mean 100%. Like literally, you would not have to come out of pocket for anything. So if you do meet the guidelines, these programs can really, really be helpful.
Yes, okay. And so, say for instance, like your conventional loans and your FHA loans where it is not 100%.
Yeah.
You have to, the borrower has to bring some money
Correct.
towards down payment. Do you have special programs that will help that borrower with those down payments?
We do.
Okay.
We have what's called a Rosebud program, which is a down payment assistance program. To qualify for that, all you would really need is to have a 640 credit, and we can give you a good amount of money down, which is really, really helpful. And the cool thing about it is it's with the FHA program. So all you have to do is get to the 640. We can definitely, it allows you to get more house than you would have been able to, because a lot of people who struggle collecting the down payment or finding the best way to get it, they tend to buy less of a house than they really need, just based on, well, how much money I'm going to have available to put down.
Right.
So now you can actually find a house that better fits your needs because you're going to have help.
Yeah.
And it's really good.
What was that called?
The FHA Rosebud program.
I've never heard of that.
Yeah, and so here's the cool thing. So there are a lot of government programs where they will offer down payment assistance. The caveat is, though, you actually have to pay them back. So it's not like a gift, it's a loan. So you have your mortgage costs, but then you also are paying for this loan on the side as well. Well, with our program, what really sets it apart is it is in-house financing, and it does not have to be paid back. As long as you're in the house for 5 years, that goes away. No money to be paid back. So it's really, really cool.
Yeah, that sounds great. I know some of the down payment assistance programs will have, after, I think some of them are like 7 to 10 years that you would have to stay in that property as a primary residence, right? Before it's actually forgiven. So this one is only 5 years. Okay.
That's easy.
Yeah.
And worst case, let's say your circumstances change, life happens. In that time frame, in the where we are now, you're gonna have equity in the house anyway. So even if you end up paying it off, the house is gonna make that money for you. So you're always gonna be in good shape.
Good. That's good stuff. That's real good stuff. Yeah. And so we hear a lot about DTI, debt to income ratios. And I do get questions, but what is that? Why is my lender telling me that my DTI or my debt to income ratios are high? So let's talk about that a little bit.
So DTI is debt to income ratio. What it is they look at how much money you're actually bringing in versus how much money is going out. So, you're paying your bills, and the money that's left over is used to calculate your DTI. So that's what it's a percentage of, including my mortgage, how much is going to be left over. And really what they want to be is in the 35, for most programs, the preferred level is 35 to 40% of what's left over. And the reason being is they really don't want a situation where you're in a house that you really can't afford, and it's called your house poor. So you have enough to cover the mortgage, but then you're really in a financial bind because you don't have truly enough to pay the rest of your bills and be comfortable. And then because of that, a lot of people default on their houses, and it's not really helpful. So that's why they really came up with this as a way to gauge and really make sure that you're in a comfortable place where you can pay your mortgage, you can pay your bills, you still have enough money to get food and necessities, and you're not really put in a bind as a result of buying this house. So it's super important.
Yeah, it is. Yes, it is. So we have 2 conditions, it sounds like. Definitely your credit score and your debt to income ratio, right?
Yeah, those are the big factors.
Yeah.
And it's funny because I talked to my buddy, I talked to my neighbor, and he got this rate, and why can't I get that rate?
Right.
No two circumstances are the same.
Absolutely.
Well, we have the same credit score. Okay, well, you don't have the same debt to income or loan to value.
Yeah.
So, he got his 6 months ago, and I'm trying to get one today. A lot changes in 6 months. A lot changes in 6 days.
That's right.
So, never try to base what you think you should be getting based on what somebody else got. The circumstances are never going to be the same. He may make, $50,000 more than you make. The loan to value is lower or higher. The circumstances are always going to be different. And, and another thing, when you look at rates online and they say that this is the best rate, they're posting rates usually under all of the best conditions. The lowest possible loan to value, the lowest possible, or actually the highest possible credit score, most money down, like every possible scenario is perfect.
Yeah.
Then you qualify for that rate.
Right.
So don't always be swayed by that. I think I should be getting this rate, or I should be getting that rate, because it's based on the unicorn type of buyer that checks every single box and is perfect.
Yeah.
Which most normal people don't follow.
Right. That's right. You've mentioned loan to value.
Right.
Let's talk about what loan to value is.
So usually they're going to do an appraisal. Occasionally you can get what's called an appraisal waiver, where just looking online, the value has gone up so much that they honestly don't even need to do the appraisal. So what the house is worth versus the loan amount. So that's also a percentage, whether it's, if you have, the house is worth 500,000 and you're putting 20% down, well then that's 80% loan to value. So it's just what the house is worth minus, what you're putting down, and that's what's left. So it's all percentages. So if you are below 80% with most of the programs, you're not going to have to pay any kind of private mortgage insurance. And as that LTV percentage goes down, or loan to value percentage goes down, then your rate goes down as well because you're less of a risk.
Yes.
And everything, all the pricing is based on how much of a risk is this person. So someone with 800 credit score is less of a risk than someone with a 640 or a 580.
Right.
So it's not personal, it's just everything's based on risk. And that's how a lot of the people will, or a lot of the companies determine how the pricing will go. It's kind of like a chart. If you're at 700, 800, the rates are here and they go down. If you're at 600, they go down a little bit. If you're at 500, they go down. So
yes,
that's it's a lot of factors that really determine that.
Yes, yes. And so we're going to be talking about whether or not if this is actually a good time to buy. I get asked often, is this a good time to buy? What do
Absolutely.
you say?
Absolutely. Now more than ever, for a whole host of reasons, is really a great time to buy.
It is.
I know we discussed this earlier, but throughout the pandemic, a lot of other businesses were shutting down left and right, whereas the housing market just continued to thrive, up, to the point where it was thriving so well. You could list a house and within 30 minutes, you already had your first offer.
That's right.
Which is incredible. And on top of that, so many builders have really just started expanding their networks and pumping out more houses. So whether you want to buy a house that's already existing or you want to build, you have so many options and choices. And then, on top of that, you take a company like Mid-America Mortgage with all the different resources and programs that we have, everybody can buy a house. So it's just a really great time. We've got all these programs. You got someone like myself who, I live for this kind of stuff to help people really, get their hopes and dreams accomplished. It really gives me a sense of satisfaction. So yeah, it's really the best time to buy.
Yes, interest rates are so low.
Absolutely.
Oh my goodness.
And to piggyback on that, these rates have just been ridiculous. And as everything starts to normalize, when the pandemic goes away, these rates are going to go up. That's not an opinion, that is a fact. These rates are historically far lower than where they were and where they should be. So when everything goes back to normal, it is going to go up. So you definitely heard it here. You want to definitely get in the house sooner than later.
Yes.
By far.
Absolutely. I totally agree with that.
Yeah.
Totally agree. As I discussed in my previous episode, it is a little challenging for the buyer because it's multiple offers.
Yeah.
But once we can get past that and you get your offer accepted, it is the best time to buy. The absolute best time.
And that's the other cool thing about my company. So there are, like we discussed, other companies that do have down payment assistance programs. But because those programs are through the federal government, it's a lot more hoops you gotta jump through. And those actually have to be disclosed on your pre-approval letter, where ours does not. And when you have a buyer or you have a seller who is, looking through different offers, and they see that right on, hey, okay, well, this person isn't as qualified as this person based on the fact that, hey, it's look right on the pre-approval, it says that they're receiving down payment assistance. So a lot of them shy away from those offers. So with ours, it's not something that has to be laid out on that pre-approval letter. So it does give you just a better chance of getting your offer accepted. So every little thing, works in your favor, as they say, to help you get a house. It's really cool.
So is that because it's in-house financing? Is that why? Oh, okay. Yeah. That's strong.
So we're not held to the same guidelines as another company who's using government down payment assistance. They have different requirements than we have. So it gives us a little leeway to be able to help you out with everything not being so out in the open. Everyone doesn't have to know that you're receiving this help. It's really cool. That
is really good. Yeah. I like that.
It's a big deal. It's a big deal.
Yes, that's phenomenal. I've not heard of that Rosebud, right?
Yeah.
Okay, I've never heard of that. I'm definitely interested to get more information about that.
I can tell you that it's so helpful because, times are hard all the way around for everybody.
Absolutely.
From the billionaires to the millionaires, all down. It's, this pandemic has been challenging for everybody. So, people have had to use savings to get by. So everyone doesn't have, just a closet full of money, to put down on a house.
Right.
And why should they suffer because of that? Be forced to rent or live with friends and family for an extended period of time when home ownership is really an amazing way. I'm not a tax professional, but going from renting to home ownership really can help save you a lot of money at the end of the year in your taxes. Obviously check with your tax professional on ways to do that, but it's really just great. Having something that's your own, there's nothing like it. When you walk through the door with your keys to your house for your family, it's life-changing. Definitely life-changing.
I totally agree.
Yeah.
So Paul, we thank you so much.
Yeah.
For stopping by and giving us all of this phenomenal information.
Absolutely.
I mean, you brought a wealth of just a plethora of information on just mortgages and how one that has low scores and no money or very little money, how you would be able to assist them.
Yeah.
So I mean, this is great.
You know what? And actually, what I wanted to tell you about, something that we specifically at Mid-America Mortgage, what we do, we have something that's called rapid rescore. So this is huge. Generally speaking, you're going to get conditions from the underwriters that have to be met for you to close on the loan. Whether it's a bill needs to be paid down or paid off, or something needs to be taken off your credit. And these things generally take anywhere from 30 to 60 to 90 days because you have to send the information to the credit bureaus and then they verify it, make sure everything's valid, and then they'll remove it from your credit. Well, with our rapid rescore program, what normally would take 30, 60, 90 days, we can actually do in about 3 to 5 days. So when buying a house, time is of the essence. A lot of times, if you're taking 30, 40, 50 days or more to get something done, you're going to lose the house. You're not going to have that. They're not going to sit around and wait for you to fix your credit. So it's an opportunity where we can get things done literally at the snap of a finger. It just really puts you in a great position to be able to buy a house. So a lot of lenders don't do that, but we do offer that for you as well. So just definitely keep that in mind. We are here all of us are here to really just not only give you the tools and the information and the knowledge, but make sure it's really easy for you so you can have a really great, memorable experience for, quite honestly, the biggest purchase you'll probably make in your lifetime.
That's right. Yeah. Thank you so much, Paul.
Absolutely.
I really, really appreciate you.
Oh yeah, it's been great.
Yeah, so anyone who has any additional questions or comments as it relates to mortgages, Paul Grady is definitely a great person, as you've heard him say. He works well past the 8 to 5 normal hours, so he definitely works after 5 and on the weekends. So he is definitely a great point of contact as it relates to mortgages. His information, he's going to share that with you, his contact information.
Yeah, you can reach me on my cell phone, 704-706-4470, or you can go to my website, paulgradycloses.com, or you can shoot me an email at paul.grady@midamericamortgage.com.
Thank you so much, everyone, for tuning in with us. Let's Talk with Tijuana again. We'll be right back at you next Thursday. We will be presenting some more great information. Tune in at 4 o'clock every single Thursday. Once again, be blessed, believe, and you shall benefit.